This is 2025 Forex Trading Empire Mentorship Program Lecture 16, and the topic for this lecture is the 7 a.m. to 10 a.m. trade setup. Now, in this 7 a.m. to the 10 a.m. trade setup, it covers all the New York time. If you're trading during the New York time, this covers the New York AM section. Now, the reason I combine the whole time together is because there's a specific time that's been divided into two. I can divide this section into two where I'm looking for a specific setup based off those two times. Now, the first time is the 7 a.m. to the 8:30 a.m. It's mostly going to be used for scalping, and the 8:30 to the 10 a.m. is going to use in catching either a continuation or a complete reversal of the daily trend or the daily range. Now, going into more specific, once we get deep into this lecture, I'll be going through more specific on why we have two time frame to form this 7 a.m. to the 10 a.m. trade setup. Now, 7 a.m. to 10 a.m. trade setup. First, you need to learn how to anticipate the next draw on liquidity. So, anticipating the next draw on liquidity is one of the major ways because you need to determine the bias. So, you're going to be determining the next draw on liquidity as explained on previous lecture. So, you're either going to be using the weekly bias to determine your next draw on liquidity, or you'll be using the daily bias. You can combine both if you know how to combine both, which in further lectures I'll be showing how to combine both time frame. But for now, you pick one. Either you're a day trader, which you can still use this weekly bias for your day trades. You can still use the daily bias for day trading scalping, which was explained on previous lecture. So you pick either you're sticking to the weekly bias to determine your daily bias or determine your whole week bias, or you're sticking to the daily bias. Which, if I were to tell you guys where you should focus on, which you can grow a quick momentum in understanding price action, is sticking to the weekly bias. In further lecture, I'll be using mostly the weekly bias. I'll be using the daily bias, but it's going to be on the specific days where I don't have a clear direction on the weekly bias. But if I have a clear direction on the weekly bias, I'll be sticking to the weekly bias because I find it is more easier for traders to stick to it, which I've mentioned a few times. So understanding the next draw on liquidity is very important. So anticipate a 5 minute or 15-minute entry between the 7 a.m. to the 10 a.m. price range. Now, this price range is after having a bias and price is fully aligned with your trade plan, your bias, and you already anticipate the next draw on liquidity. Then you'll be looking for an entry between this range, the 7 a.m. to the 10 a.m. Now, there's a few specific to it. There's a few specific to it because you'll be taking notes of the high impact news and looking for an entry after the high impact news. So now, in an example where there's a high impact news before 8:30, now in most cases the high impact news is being announced 8:30 Eastern Standard Time, American Eastern Standard Time. So during that time, if there's any high impact news before 8:30, then you wait till after 8:30 to execute your trade, which is you'll be taking advantage of the 8:30 to 10 a.m. model. But if there is no high impact news before 8:30, then you can take advantage. You can look for your setup from the 7 a.m. to the 10 a.m. But when there's a high impact news, you look for your setup from 8:30 a.m. to 10 a.m. after the high impact news, after the first high impact news. There are some scenarios where there are two high impact news. There might be a high impact news around 9:45 a.m. and there's still going to be a high impact news at 8:30 a.m. After the 8:30 a.m., you can execute your trade and manage your trade properly because the 9:45 a.m. high impact news will lead to a high expansion to either your direction or against you because that's going to be used to take targets. So always take note of the high impact news on every individual days that you are taking your trades, or the whole week you use a horizontal line to mark out those days where there are high impact news and try to write down the high impact news because you're going to be using it for your journaling to understand how price trades during this high impact news. What are the criteria of price going high or going low during this high impact news. Make sure to have a bias before looking for a setup between the range of 7 a.m. to 10 a.m. New York Eastern Standard Time. Now, this is making sure you have a bias. You need to have a bias before even looking for any entry. Where you don't have a clear bias, you're not looking for any entry, because you need to have a bias and a trade plan on what you are anticipating price to do before you execute any trades, which will go into more specific ways and more ways for you to develop a trade plan on further lectures. These are just creating awareness on where to look for your entries. Now let's move to the charts. So we're on the daily time frame of Euro USD. Now in this example, I'll be using the daily bias to determine my trade setup. I'll be looking for my entry during the range of 7 a.m. to 10 a.m. Now I'm going to explain on how I will determine my bias and why I'll be looking for a trade setup during that time, and my whole trade plan. Now first, price run out the sell side liquidity. After running the sell side liquidity, price got a swing high, a retracement back to this range from the swing high to a swing low. A retracement failed to create lower low. Price created this impulsive price action with this one candle, one daily candle, running out this high, making it an order block and trading close to the buy side liquidity. I think price at close to the price during the time. So I'm using the replay in this example just to make it more faster. Now, my trade plan is to anticipate higher prices, because if this uptrend were to continue and price were to create a fair value gap within this range from the swing low to swing high, then I'll be anticipating higher prices for price to run at the previous day high. That will be my daily target. You need to know your daily target before taking a trade during the 7 a.m. to 10 a.m. So now if price have already run out your daily target and price is now aligning with your weekly objective, those are the difference between the daily, using the daily bias and using the weekly bias when it comes to the 7 a.m. to the 10 a.m. trade setup. Now the daily high is my target. I'm looking for higher price or price run out the daily high. Now price might retrace to this other block before going higher, but I'll be looking at lower time frame to look for a fair value gap that will support price inside this price range, that will support price to lead to higher prices or price to trade to the daily high. That if price were to continue without going lower to this other block, to leave a fair value gap within this price range, which is mostly called a trade away gap. So in scenarios like this, I do use the 4-hour trend. So see if the 4-hour trend is aligned with the idea, then I stick to the 4-hour trend to look for my trade. Between the swing low to the swing high, fair value gap. Here's the fair value gap. Now in this example, the fair value gap is aligned with the daily order block. So you can see we are driving more confluence to the setup, that if price to reduce to this fair value gap, it's a high probability to look for higher prices for price to trade to the daily high. Now you're not looking for any setup till you see price retrace to this other block or the fair value gap to look for higher prices for price to run at the daily high. Now let's play price. Now price used this candle retrace back to the other block and the fair value gap. This is where you go into lower time frame to look for your entry. But I'll be playing it throughout the day. Now during this time range where price did a retracement back to the other block, did a trade back higher to run at the daily high before the closing price. Now I'm going to look at this a specific time at 7 a.m. to 10 a.m. to look for a setup before price run out the daily high. If price had already run out the daily high before 7 a.m. to 10 a.m., then we are not looking for any setup, because price already traded to our daily objective, and the 7 a.m. so the 8:30 to the 10 a.m. might lead to a trade reversal back to the daily range. And we don't want to be looking for a setup during that time when price is trading back to the daily range, because it's leading to closing price with the market do close based off London time around 12 a.m. London time. The London section do close during that time. So before the closing price of the London section, we are looking for a setup before the closing price. So between the time range of 7 a.m. to 10 a.m., we'll be going to 15 minutes to wait for a shift in market structure after price traded to the daily order block and the 4-hour fair value gap. Now first, let's use a horizontal line. So let's use a vertical line to mark out the 7 a.m. Here's a 7 a.m. and here is 10 a.m. Now we are looking for a setup within this price range. We're looking for a setup within this price range. And our target is to see price run out the daily high, which you can clearly see that is an equal high liquidity. We're looking for a setup within this price range. Now you can see the alignment on how the London section led to lower prices, so the fair value gap. Now the New York section is leading to a reversal of this daily range. Here's the daily range. Now it's leading to a reversal of the daily range going for London high. So if I were to turn on the section indicator, now in this section indicator, you can see a retracement of the daily range. Price traded lower. Here's the opening price. Here's the opening price. Price traded lower to the fair value gap. Now the 7 a.m. to 10 a.m. led to the retracement back to the daily range that led to a complete reversal for price to trade above the opening price to go for the equal high. Seeing price trading to a discount liquidity, 4-hour discount liquidity, we're looking for a 15-minute shift in market structure, because if I were to use the daily bias, I'll be paying attention to the 15-minute trend. The 15-minute trend is going to confirm that price is trading to my direction before I look for any entry. Now, prior to this fair value gap, I want to see a 15-minute shift in market structure before going into lower time frame to look for entry, like the 5 minutes and the 15 minutes. You can either use directly from the 15 minutes or you use the 5 minutes. Now, zooming closer, price traded to the fair value gap and the other block from the higher time frame. Price traded higher, did a retracement back to this other block. After retracement back to this other block, price created a new high. Now, this is confirming the price have shifted structure from this downtrend. Now, price is at an uptrend. And here's the candle that confirmed that this candle close confirmed the candle that price is now on an uptrend. And this happened around 8 a.m. Around 8 a.m., price have shifted structure completely from a downtrend to an uptrend. Now we are now looking for an entry from this price range, which from the 15-minute price is now retraced back to this other block. Here's the 2 candle other block. The 2 candle other block. Price is now retraced to the 2 candle other block. This is where you use your 5 minutes, which in most scenarios I will advise you guys to use your 5 minutes after the shift in market structure on the 15 minutes. Now go to the 5 minutes. Now on the 5 minutes, here's the candle that confirmed the shift in market structure. On the 5 minutes, price shift structure, left and order block, created a new high. Now here's a fair value gap aligning with our bias. So price did a retracement to the 5 minute order block, respected the 5 minute fair value gap, respected the 5 minute fair value gap, did a trend continuation, traded higher, and here's another entry. Fair value gap, here's the order block, exact area of the fair value gap. I respected the fair value gap, led to higher prices. After, you can hold trade after this time. This is just looking for an entry during this time. You can still hold trade after the time. Now, this is an example where there is no high impact news before 8:30 or after 8:30. There's no high impact news during this time range. So you can see I started looking for my entry from the 7 a.m. If there were high impact news, I'll wait till after 8:30 to look for my entry, to look for a setup. Since there is no high impact news, price, I'll be looking for an entry before 8:30. Now, price did a shift market structure before 8:30 on the 15 minutes retracement fair value gap. Your first entry, second entry, your target is the daily high. So you can see how this time range provides a good entry when everything is aligned with your higher time frame bias. Stop loss at the swing low, higher prices, daily high as your target, catching the reversal trend. Now you can do your own back testing based off this time range and always factor in days where there are high impact news and days where there is no high impact news, so that when you're doing your back testing and your forward testing, you can align it correctly. But you're looking for your setup from the 7 a.m. to the 10 a.m. when there's no high impact news. But when there's a high impact news at 8:30, you wait till they announce the high impact news and look for your entry after the high impact news, because you don't want to have any trade on the line where when they are releasing a high impact news like the CPI, NFP news. Those news do trade to one direction with a very high impulsive price action, and you don't want to be caught up in those price liquidity, because you might have a executional slippage, or if you're using a prop firm, your account might have a soft bridge or even a hard bridge during that time, telling you that you just lost your funded account because you traded when there's a high impact news, or your trade took profits when there's a high impact news. It's mostly because of slippage, and you don't want to be caught up in the high impact news slippage. So no high impact news, clean price action, price delivered correctly, trade higher to what you get. And you can use this as an entry. You can see there are two entry within this time range. An entry before 8:30 and an entry after 8:30. So this mostly happen when there is no high impact news. But if there's a high impact news, you'll be looking for your entry after 8:30 and price delivered correctly. I explained how I got my bias from the higher time frame, anticipating price to create a new high. Price trade rolling out this high. 4-hour fair value gap, respected the 4-hour fair value gap and daily order block, led to higher prices for price to run out the equal high. So that is it for this lecture. Make sure you do your back testing and forward testing. Pay attention to this time range which has been explained in this lecture. 7 a.m. to 8:30, then 8:30 to 10 a.m. Now, if you guys have noticed, I've talked about a specific time to look for your entry during the London section and a specific time to look for your entry during the New York section. Now, you can trade currency pair that is well correlated to those pair, but you can easily apply this trade plan, these time zones to Euro USD, GBP USD. So if you are a trader that trade during those times, this is the best times for you to look for your trade setup. So that's it for this lecture. See you guys in the next lecture.